Hello, Namaste, Namaskara. I'm your stock market teacher, Matthew. In this video, I'm going to make it very simple for you how to read charts like a professional. And this is part 1, and I'll be coming out with part 2 as well. I'm going to share with you, my 14 years of trading experience in the market, how to read charts like a professional. What does a professional do in order to understand what is happening in a stock market? This is what is technical analysis is. Now I'll give you a gist of what technical analysis is. You must have seen in my previous video as well what technical analysis is. So just to brief you or refresh what technical analysis is. Technical analysis is nothing but an understanding of the price action along with the volume. Understanding of the price action along with the volume. Now, what is price action? Price action is whatever price you see moving on the charts, or you see the price action, that is demand and supply on your trading platform. What is price action? Price action is nothing but it showcases the psychology of the market participants. So what technical analysis does is technical analysis understands what this price action is doing, and we try to figure out whether there is a buying interest, whether there is a selling interest, and we initiate the trade accordingly. This is in a nutshell what technical analysis is. So now how do I use this chart reading to my benefit? So that I can make money in the markets. Now let me tell you, the chart that you see, or the chart reading of the price action that happens, it is not only applicable to a certain asset class like equity. Technical analysis can be applied to anything under the sky which has price and volume, which means that you can trade in equities, you can trade in commodities, you can trade in foreign currency, you can trade in bitcoins as well, the cryptocurrency. So technical analysis is applied across. And what I'm going to teach you in this video is that this chart reading is not only applied to on a delivery based trades, but also it can be applied on intraday trading as well. So this is going to be a part 1. And my objective is to make it as easy as possible for you to understand how chart reading goes and how professionals look at the chart. So in the part 2, I'll be discussing more in detail on the extension of the part 1. So let's begin. Let's not waste more time. Now, as you can see, this is the chart, which I have access to, and it is coming from the website called as tradingview.com. Now, this is a chart service provider which gives you a free charts, and you can make use of these charts. All you need to do is you need to sign up with this chart service provider, and you can annotate on the chart, you can draw lines on the chart, which is more of technical analysis to understand what is happening in terms of price action. Now this is your chart. Now I'm sure everybody have used charts in one or the other way. When in school or in colleges we have used the charts. Now what you're looking here on the chart, you can see here, on the horizontal axis, it is the time, or it is the day, or you can also see the year, and on the y-axis you can see the price. You can see the price as moving up, the price coming down, and what price it is currently trading at. So on the x-axis you see the time. Now you get this information going back into the history as well. So you can go back into the history and try to find out what was that price okay, of that asset class on that particular day, on that particular month, okay, on that particular year. Okay, so we have this data going back into the history as well. Now on the y-axis you can see the price. Okay, as the price goes up, price goes down. Okay, this price you can see is in ascending order. Okay, as you read from down to up, it is in ascending order. All right, so this is your simple price chart. Okay, this is your price chart for which company? This price chart, what you're looking out for is for Reliance Industries. Okay, it's for Reliance Industries on NSE. You can see it's on National Stock Exchange. All right, now as I said, on the x-axis you can see the time, on the y-axis you can see the time. Here you might be wondering, okay, what is this? Okay, one is in green, one is in red. Now this is what we are referring to as price action. Okay, this is what is called as price action. Price going up, price going down. Now this price action is printed on the charts depending on the buy and the sell that happens on the exchanges. That means the market participants bid and place their offers, and accordingly it will throw you a price action here, which is in the form of which we call as Japanese candlesticks pattern. Okay, or we call this as Japanese candlestick. The price that is represented here is in the form of Japanese candlestick. Okay, now you can see here, okay, if I click here on this chart, you have different price charts. Okay, starting with the bar chart, then the candlestick. This is the candlestick chart, the Japanese candlestick chart. You've got, you know, line chart. All right, you got Heikinashi chart, you got a Renko chart. Okay, you got point and figure chart. So there are different price charts presented to you in various forms. But here what I am looking out for is I am looking out for a price action understanding through Japanese candlesticks. Now you might ask, why Japanese candlesticks? The reason being, Japanese candlesticks, okay, are easy to decipher. Okay, they throw out a color, they throw out an understanding of where the price has reached, what's the high point, what's the low point, which I in a short while I'm going to take you through. All right, so this is the Japanese candlestick price action. Now how this Japanese candlestick get formed? Okay, so I'm going to go through in a very raw form, okay, from the basics, so that you can understand it simply. Okay, how the Japanese candlesticks are formed on the charts. Okay, what are the things that you need to take into account for the construction of Japanese candlestick. All right, then I will discuss something in regards to the time frame also. What are we looking at? All right, so tradingview.com, there are other platforms also, other websites also, which provide you this price chart. I am using here the tradingview.com. all right, fine. Now how does the candlestick, that is the Japanese candlestick, gets constructed, okay, on a chart? Now to construct a Japanese candlestick, I need 4 price points. Okay, I need 4 price points, which we refer to as OHLC, which is nothing but the open price, okay, the high price, right, the low price, and the close price. Okay, see, these are the 4 price points which I need to construct a Japanese candlestick. Without these 4 price points, I cannot construct a Japanese candlestick. Now where do I get these 4 price points? Okay, now that depends totally on the bidding and the offer that happens during the market hours. Okay, as you know, our Indian market, the stock market, is open from 9:15. The normal trading hours start from 9:15 a.m. goes up to 3:30 p.m. Okay, there is a pre-market session which happens from 9 to 9:15, but this is your normal trading hours. Okay, now here what you're looking at, okay, the price at which a particular asset or particular stock opens, okay, which is normal trading hours 9:15 a.m. At this time, okay, when the price opens, okay, that is considered as the first price that gets printed, okay, on the chart. That is referred to as the open price. All right, now after opening at a certain price, say for example it opens at 100 rupees, right? Say for example it opens at 100 rupees. Okay, after opening at 100 rupees, based on the demand and the supply, all right, based on the demand on the supply, the interest that market participants show in that particular equity, in that particular stock or an asset class, this stock might move up and down. Okay, this stock might move up and down. So as it goes up and down, it leaves a mark here. Okay, it leaves a mark here. All right, now after opening at 100 rupees, it can stay at 100 rupees as well. Okay, it is totally dependent on the market forces. Okay, it is totally dependent on the market forces. NSE, BSE or nobody else has got to do anything with regards to the stock price. Okay, market forces determine what the stock price has to be, where it has to go. Okay, it has to go up or it has to go down. All right, so it's the market forces who matter a lot in this particular stock market. All right, so once it opens at 100 rupees, it could stay at 100 rupees or it could go up, it could go down, and it could close at a certain price level. Okay, say for example it opened at 100 rupees. All right, after opening at 100 rupees, it went up all the way to 115. After reaching 115, again it came back down. All right, say it made a low of 95 and it closed at 110. Okay, see, anything could happen in the market. Okay, market forces determine what will happen to that particular asset class price action, right? So it could open at 100, it could go to a high of 115, it could go to a low of 95, and it could close at 110, right? So what was the open price? It was 100 rupees. Okay, the highest point it reached during the day was 115. Okay, and the lowest point it reached during the day was 95. And at what price it closed? It closed at 110. Okay, so with these 4 price points, I can construct a Japanese candlestick. Okay, with these 4 price points, I can construct a Japanese candlestick. All right, now how to construct a Japanese candlestick? Okay, if I have to do it manually with these 4 price points, how do I do it? First, what I'll do is I'll just draw a vertical line. Okay, I'll draw a vertical line. I'll mark the high point and the low point first. What's the high point here in respect to this price action? The high point is 115. All right, what's the low point? It is 95. Okay, it is 95. Right, so once I mark my high and the low point, now I can mark my open and the close price. Now what is the opening price? Opening price is 100. As I said, the scale is in ascending order. All right, so if the 95 is here, 96 could be here, 97 could be here, 98 could be here. So here it can be 100 rupees. So this is your opening price. Okay, this is your opening price. Now what is the closing price? Closing price is 110. Okay, closing price is 110. So where will 110 fall? Okay, where can I mark it? It cannot be below 100. Okay, so it should be above 100. So 110, say for example, roughly this is my 110. This is my closing price. So once I've marked my open and close, what I have to do is I have to join the open and the close price points. Okay, I have to join the open and the close price points. Once I join the open and the close price points, there you go. You've got your Japanese candlestick, which has been plotted based upon the 4 price points, that is the open price, the high price, the low price, and the close price. Okay, what was the open price? Open price was 100. Okay, what was the high price? High price was 115. All right, what was the low price? Low price was 95. What's the closing price? It is 110. There you go. You've got your Japanese candlestick construction. Okay, the reason I'm discussing this is because when you open a chart and a certain candlestick is formed here, you should know why this candlestick has formed in such a manner. It is because of the open, high, low, close numbers that get printed on the exchanges, and taking those numbers I can place or I can construct a Japanese candlestick. Okay, now you don't have to construct a Japanese candlestick because it is provided to you by tradingview.com freely. All right, so you don't have to construct. It has been constructed here and you can make use of this, but it's very it's very important that you know how the candlestick gets constructed. All right, so this is the construction of a Japanese candlestick. All right, now you can see here few candles are green. All right, few candles are green, few candles are red. Okay, now why there is a difference of color? Why there is a difference of color? Now difference of color, okay, is based upon the closing price. Okay, is based upon the closing price. Okay, so that makes the closing price very important. Okay, that makes the closing price very important. All right, so now how does the candlestick color body, okay, turn red? How does the candlestick color body turn green? I'll come to that in a short while. Now let me take a fresh screen here. Now see, this is your Japanese candlestick. Okay, you have plotted this candlestick. Okay, say for example, this is the open and the close, this is the high point, and this is the low point. Okay, now from the high point to the low point, all right, this whole price action is called as a trading range. Okay, what is it called as? It is called as a trading range for that particular time. Okay, for that particular time frame. Okay, now there are certain terms that we look at in a candlestick. Okay, now here this part, okay, sometimes your Japanese candlestick will be a rectangular shaped body, or sometimes it could be a square shaped body. Okay, it is totally dependent on the market forces, how they are determining the price move. Okay, based upon that. All right, so you don't have to worry what will be the candlestick body be. Okay, how you are plotting it matters a lot. Okay, so now this part, the open and the close part, when you join your open and the close price point, this is referred to the body. Okay, this is called as the body of a candlestick. Okay, this is called as a body of a candlestick. These lines here, okay, this line on the bottom, this line here on the top side, okay, they are known as shadows. Okay, they are known as shadows. Okay, or in this case shadow. Okay, they are called as shadow. Now the line that you see on top of the body is called as the upper shadow. The line you see here on the bottom side, okay, is called as a lower shadow. So you have an upper shadow, you have a lower shadow. Okay, sometimes these shadows are also referred to as wicks. Okay, wicks or wick, they are referred to as wick or wicks. So you got an upper wick and you've got a lower wick. So, okay, so this whole candlestick is constructed taking into account the whole trading action that happens for that particular time frame. Right, now why the candlestick color? Okay, if I go back to this chart here, why some candlestick colors are red and why some candlestick colors are green? Okay, as I said, the candlestick, okay, the body of that candlestick color is determined by the closing price. Okay, so closing price is very important for us, so it's determined through a closing price. Now when is the candlestick color turn green and when does the candlestick color turn red? Okay, now whenever you see a closing price, okay, whenever you see a closing price which is above the opening price, see in this case, where is the closing price? It is above the opening price. So whenever the closing price is above the opening price, that candlestick body will be green in color. Okay, that candlestick body will be green in color. Okay, what is that? When the closing price is above the open price, okay, or when the closing price is greater than the open price, the candlestick body will be green. So when it will be a red color, then the candlestick color will be red, or the candlestick body will be red when the closing price is below the open price. Okay, so now if I draw a candlestick like this, okay, for example, open is here, close is here. Now to determine the color of the candlestick, what I need to do? I need to see where the closing price is. So here the closing price was above the open price, that's why you have a green color candlestick. If the closing price is below the opening price, you have a red color candlestick. Okay, you got a red color candlestick. So this candlestick color is red. okay, this candlestick color is green. Okay, so the color of the candlestick is totally determined or dependent upon the closing price. So that's why you see here you have different colors on that particular day. On a day there is a green color, on some days it is red color. Okay, now if you see here, now how do I, now the time frame that I am looking at, okay, you see here this is called as a time frame. So the time frame I am looking at, it says as D. So if I place a cursor on this particular time frame, it says 1 day. That means this is my daily time frame. Okay, this is my daily time frame or 1 day time frames. What do I mean by that is each candlestick, okay, each candlestick is plotted taking into account the full day's price action. What is my full day's price action? From 9:15 a.m. to 3:30 p.m. Okay, 9:15 a.m. to 3:30 p.m. This is my 1 day time frame or 1 day's price action. All right, so 9:15 a.m. to 3:30 p.m. Okay, so this is my first open price, this is my 3:30 price, which is the closing price, and between 9:15 to 3:30, whatever is the high point and the low point, I get my open, high, low and close price, on which you can, based on your Japanese candlestick, can be constructed. Okay, Japanese candlestick can be constructed. So the time frame that you are looking at is a 1 day time frame, and each candlestick represents 1 day's price action, 1 day's price action. So if I place my cursor on this candlestick, this is the current candlestick in this price chart. Okay, this is the current candlestick. Behind this candlestick, you see, this is all the historical data, that is what has happened in the past. So if I place a cursor on this current candlestick here, okay, you can see the date here. As I said, this gives you the time. Okay, this gives you time. So what is the date that you can see? You can see the date it is showing up is 23rd July 21. That means this candlestick was constructed taking into account the price action for Friday. That is 23rd July was Friday, from 9:15 a.m. to 3:30 p.m. whatever was the open, high, low and close, that price action was taken into account and the candlestick was constructed. Okay, so now you see the 23rd July 21 candlestick, which if you see here, if I place a cursor here, now on the top side here, okay, you see here on the top side, here you can see, okay, if I place a cursor there, you can see what is OHLC. That means open, high, low and close. You can see the opening price on Reliance Industries at 9:15 a.m. on 23rd July was 2134.45. okay, the high it reached was 2134.45. the low it reached was 2102.05. The closing price, that is the 3:30 price, the closing price was 2105.70. okay, so you have all 4 price points. Now you can see that it's a red color candlestick. Now what did we just discuss when it is a red color candlestick? When the closing price is below the opening price. So let's see now whether the closing price is below the opening price. So if I place a cursor and refer the open, high, low, close numbers here, you can see the closing price is 2105.70, opening price is 2134.45. so definitely the closing price, that is 2105.70, is lower or below the opening price, which is 2134.45. so what is the color of the candlestick that you have? You've got a red color candlestick. Okay, if the closing price was above the opening price, you would have got a green color candlestick. Now the another interesting point here, you can see this candlestick which got formed on Friday on the daily price action, it does not have an upper wick or an upper shadow, and there is a reason for that. The reason for that is in your price points, that is in the open, high, low and close. As you can see, what is the opening price? 2134.45. what is the high price? 2134.45. so now you can see here the open and the high price are the same. So whenever the open and the high price is the same, you will not see an upper wick or an upper shadow. Similarly, if the opening price and the closing price, okay, sorry, I mean to say the opening price and the low price, if it's same, then you will not see a lower shadow. You can see here, okay, can you see this candlestick here, this big green color candlestick? If I place a cursor on it, you can see what is the open, high, low and close. And in this case, the closing price is 2094.80, the open price is 1990. So the closing price is definitely higher than the opening price. So what's the color of the candlestick? It's a green color candlestick, and you can see there is no lower shadow on this particular candlestick. Why is that? Because your open price and the low price, can you see here, can you refer this here, the open price and the low price are the same, that is 1990. In that case, you do not see a lower shadow. Okay, you do not see a lower shadow. Right, so it's that simple, guys, that simple on understanding the construction of the candlestick. You just need 4 price points and you construct the candlestick based on these 4 price points. All right, open, high, low and close. The color of the candlestick is dependent upon the closing price, and closing price above the open price, it is a green color candlestick. Closing price below the open price, it is a red color candlestick. Now when does a candlestick color does not have a color? Okay, when will a candlestick does not have a color? That will be dependent upon the closing price again, and when the closing price is same as your open price, that's the time you don't have the candlestick color, and there is no body as well. Okay, it's just one flat horizontal line, because the open price and the closing price are the same. In that case, you will not see a body, whereas there won't be any color coding in this case, right? So this is how the candlestick construction takes place on the chart. Okay, now as I said, this is a daily time frame that you were referring to. Okay, what is it? It's a daily time frame. That means each candlestick takes into account the full 1 day's price action from 9:15 to 3:30. All right, now if I click here on this particular time frame, so you see here how many time frames we have, starting from 1 minute up to 1 month. Okay, you have these many time frames. Okay, these many time frames are there. So now, if say for example, if I have to construct a 5-minute candlestick, okay, if I have to construct a 5-minute candlestick, okay, so how does that happen? If I have to construct a 5-minute candlestick, again the same thing. There's no difference in construction of the candlestick if you change the time frame. Okay, now you see this is the start of the session on Friday, that is the 23rd July. Sorry, that's 22nd here. Okay, you can see here this is the start of the session here, as you can see, for 23rd July. So how does the 5-minute construction take place on the chart? It takes into account, okay, in a 5-minute frequency. So what's the opening time? It's 9:15 a.m. Okay, from 9:15 to 9:20. So what will happen is, it takes into account the opening price, the closing price in between 9:15 to 9:20, whatever was the high and the low. So you got open, high, low and close. Okay, you've got open, high and low and close. And when you construct a candlestick, you've got your first 5-minute candlestick. Okay, if you want to construct the next 5-minute candlestick, it will be from 9:20 to 9:25. Okay, 9:20 a.m. to 9:25 a.m. All right, so 9:20 a.m. the opening price, the closing price, the high and low between 9:20 to 9:25 a.m. You've got a second 5-minute candlestick that it can be plotted on the chart. As I said, you do not have to plot it, it is done here. You see here the first 5-minute candlestick was plotted, the second 5-minute candlestick was plotted, the third candlestick 5-minute was plotted, taking into account every 5-minute frequency up to 3:30 p.m. okay, up to 3:30 p.m. okay, we have 6 hours 15 minutes price action trading that happens, okay, in a day. And if I want to break it via 5 minutes, these number of candlesticks are constructed. Okay, these number of candlesticks are constructed. So if I place a cursor on this 5 minute, the first 5 minute for 23rd July, okay, you can see the open, high, low and close. What's the open? 2130.60. What's the high? 2133.30. What's the low? 2125.15. What's the close? 2130.40. So you have that 5-minute price action, open, high, low and close. Now you see here the closing price is below the open price. What's the closing price? 2130.40. The open price is 2130.60. so the closing price is below the opening price, so it's a red color candlestick. You got that? See, you have a different time frame, okay, but the concept, the logic remains same on that candlestick construction. Okay, now if you want to construct a weekly time frame, now you see here each candlestick represents 1 week's price action. Okay, each candlestick represents 1 week's price action. Now if you see here, this is the recent week's price action, that is the last week, Monday to Friday. Now how does this price action take into account which is the open, which is high, which is the low and close? Simple again. What's the start of the weekday? It's Monday. What's the opening time? 9:15. So Mondays 9:15 opening time, Fridays 3:30 p.m. closing price. Okay, between Monday to Friday, whichever the highest price point it reached, whichever the lowest price point it reached, that is the low price it takes into account. So you have Monday's opening 9:15 a.m., Friday's close 3:30 p.m. the high point and the low point it reached between Monday to Friday. You've got your open, high, low and close, and your candlestick is constructed. So if you see here, the opening is 2100 on Monday 9:15 a.m. closing is 2105.70, which is 3:30 p.m. Friday. All right, the closing is above the opening price, so you got a green color candlestick. What was the high point it reached during the week? 2134.45. What's the low point it reached during the week? It is 2084. So you got an upper shadow and the lower shadow. So each candlestick here, this candlestick last week, this is last to last week, represents 1 week's time frame, and you can go back into the history as well to see on that particular week, in that particular year, what was the price action. You can go back into the history as well. Okay, right? So this is the price action formation that takes place, and it is presented to you in the form of Japanese candles. Okay, it is presented to you in the form of Japanese candles, right? So this is a simple way of constructing a Japanese candlestick pattern. Okay, the simple way of constructing a Japanese candlestick pattern on different time frame, whichever time frame you are looking at. Okay, you can see that chart changes because the price, open, high, low and close, which is used to take into account, changes. That's why you see this graph is different from the weekly graph. Okay, this graph is different from the weekly graph. All right, so this is a simple way to identify and construct a Japanese candlestick price action. Okay, Japanese candlestick price action. I hope this is an useful information for you on how the candlestick patterns gets constructed on different time frame. Okay, on different time frame. Now this, okay, is pretty simple. Okay, this is pretty simple. In my next video, what I'm going to teach you is, because this is just part 1, so I'm starting with a simple basic level. In the next video, I'm going to show you, okay, what do we mean by the bulls and the bears, and how the trading takes place, what zones are we looking at, where the price reaches a certain level and bounces, why the price reaches a certain level and falls from there. Okay, it's all determined through a price action data. Okay, so it's very interesting. All we are looking in technical analysis is what is happening in regards to the price action. Okay, all that we are looking at, what happens in regards to the price action. This is very simple for a beginner to understand. Those of you who have already been in the markets, you know how this works. Okay, but for a beginner, this is how it is going to be helpful to understand the price action. Okay, all right, so in my next video, I'm going to show you the part 2 of technical analysis, what a technician or a technical analyst looks at, okay, when he or she is looking at a chart, okay, when he or she are looking at the chart. All right guys, thank you so much. This is my channel, okay, stockmarketeacher.com. please subscribe to my channel and hit on this bell notification, because whenever I upload a new video, you will get immediately a reminder that new video has been posted, and you can experience, okay, quickly what I am looking at, what I am teaching in this particular channel. All right, so you can watch my other 2 videos as well. Thank you so much. See you in the next video.